Hello, this is the tradesight stocks and futures economic roadmap and index preview for the week of April 20th, 21st through 26th, 2013. Hope you're having a good week. Start off here with the S&P daily chart, monthly chart. This is data going back all the way to the 1980s, 1975 even. And the reason I wanted to point this out is we've got a clear triple, what we would call a triple top, right? We've made it all the way back to the S&P highs that we saw in 2000 with the Y2K run-up, and then the first plunge there, and then in 2008 before the rollover and the banking collapse. And we've made it all the way back to those highs. We are just now, and this is why I wanted to point this out, put the sound in there on purpose, right? 9 bars up. So again, that's just the setup phase. It certainly isn't any major count, but you know, these setup phases often lead to pauses as well. So as we're trying to make new highs, we're kind of extended from that perspective in the market. So let's make sure we're aware of that. Seem to be stalling out just a bit. If I drop us down to the weekly look at the S&P, this is just the last 5 or 6, 7 years. Again, this is us climbing back after the 2008 plunge, getting all the way back up to that at this point. We're not really anywhere significant in the count from this perspective, but you can see that we've had a big negative week here over the last week, one of the first blue weeks in a while. So just something to be aware of, again, because we are topping out from the perspective of the setup on the monthly chart. Now let's look at the daily, and you can see that rollover that we had this week a bit. And again, that's nothing substantial, but I do want to also draw this particular trend line right here, which has been in place since the lows in November when we turned up. And you'll notice that we've exactly hit this point. We made it from November, and then right at the end of the year, and that created the trend line. Then we bounced off of it in late February. We bounced off of it again at the end of March, early April, and ran up from there. But the key here is we finally broke this trend line, and we've run underneath it. We got to close right at it, then a close underneath it on a day down on Thursday. Friday was options expiration. And if you're familiar with options expiration, sometimes that brings the market back in the other direction than it's been moving. The net for the month here, obviously not much in terms of the S&P. So that one up day doesn't necessarily mean much, but overall we have cracked this trend line. So we're going to have to keep an eye on that, but yet another sign that things may finally starting to roll over here in the markets. Now let's look at the Nasdaq-100 Index, which has been a lot less interesting so far this year. You can see the flatness that occurred in January and February, and then March really flat. We talk about this every week. Look back on this chart going back over a year or two. You don't see anything like what you see here in January and then February and then March. Just this dead sideways action. Very, very unusual and unique for the markets here. A little push up. We got the gap down on the bad employment data a couple weeks ago. Ran straight up from there and then made essentially new highs and rolled back over for the year, new highs for the year. Not quite new highs versus last year where we peaked out in September, but we did come very close to that. And if I back this one out and take a look at this from a monthly perspective as we did with the S&P, you can see the run up in the 90s. Obviously we're not anywhere near back that 5,000 level that occurred at Y2K with all the tech stocks running up. We are 9 bars up on the seeker count itself on the monthly chart. Okay. So there's an actual seeker count in motion there. Let's keep that in mind. Let's also take a look at the weekly from that perspective with the seeker on it. Okay, interesting here how we use this static trend line back at the end of last year as the low, and we've gotten a bounce. So it gives you an idea where we're at. We're near the highs of the last couple of years. We're nowhere near the Y2K highs, obviously, on the tech side. We are on the S&P side. So this is all a significant area to the market, and we've got some signs of rollover and trend line breaks, so we'll be keeping an eye on all that as we continue to trade moving forward. We like to take a look usually at the SOX, which is the semiconductor index, nowhere near the highs right now, and also the biotech index, which often leads the market. This one is still making new highs, closed at the highs on Friday. And before we move on to the calendar, let's take a quick look at a couple of key stocks like Google, obviously back to that 800 level here and pushing. And also we'll take a look at Apple. This one's obviously not quite the same picture. There's a gap on Apple back at 370 that was left unfilled from way back in the day, somewhere in this area right here. So we'll be keeping an eye on, sorry, that's not it. My bad, drawing the wrong line. It's right here. Okay, so we'll be keeping an eye on this. It's closer to 360 than 370, I guess. Okay, but that's it right there. that's the last major gap that I'm aware of on Apple, maybe at a much lower price. But we were certainly targeting that 421, and we definitely used that one along the way. First bounced right off of it. So this is another one that's in place on Apple. But remember, at this point, down at 360 level, the stock's almost 50% down from its highs. That's a crushing blow to Apple, and not a good sign overall. But again, we continue to favor the downside on this stock. Let's take a look at Amazon. Holding near highs. Let's take a look at Netflix, which obviously has the big crush last year, but back up pretty good since the lows. Alright, next up, let's take a look at the economic data that's coming out this week. It's actually a very light week until the end of the week, so not as much to trade off of. Oh, I also want to comment on the volume in the market, which the last couple of weeks have been on and off in terms of the volume. It did come back a little bit at certain points this week, but we're still only averaging about the 1.5 billion shares, and let me show you what that looks like. This is Nasdaq volume on the daily basis. So each white dot is how much volume we traded on any given day. The blue line is the 10-day moving average of volume, and you can see that last year, we played back and forth a little bit around that 1.5 billion share mark, or just above that. I like to draw that line because that's a critical area on the volume, and also the 1.7 I think is 1.7 is really what you like to see in order to get decent volume in the markets. Okay, so let me show you what that looks like. Here's the 1.7 right here. So really, for a good trading environment, you like to have a lot of days above that. It doesn't have to be every day, but you certainly want to be above that. 2 billion shares is a really good trading environment, and I'm going to draw that line as well. It's right here. Okay, so keeping in mind these two levels, you can see we haven't had. I mean, if you go back to 2011, a lot of days up above 2 billion shares, and if I scroll this chart back, further back, that was a common thing to see. But if I come here to the current part of the market, you can see that we're not having a lot of days over 2 billion shares. As a matter of fact, in 2013 so far this year, 3 days so far over 2 billion shares. That's really, really lacking in my opinion. 1.7 being what I think is sort of the minimum for a great trading environment. We have had some days, but again, you can see January and February it really picked up. Remember how bad it had gotten last year, late in the year. Obviously, the last week of every year is usually pretty light with the holidays. You can see it here, and you go back and look at the end of 2012 as well. You can see 5 days of light volume. That's just normal. But other than that, we had seen volume drop off last year, and it came back. It was coming back good in January and February, and the sequester kicked in, remember, at early March, so you can really see the impact right here that the sequester is having on the market. A lot of people don't understand that, and I'll cover that in an article in the next week or two. But again, the sequester is really the main factor here in the volume drop-off. And you can see the 10-day moving average, how quickly it dropped off right here. This is an unusual time of year for volume to drop off quite that badly. Okay, to come down to the low, I mean the average was actually breaking 1.5 billion at one point. Did pick up a little bit this last week. We've had some earnings data. We had some things going on in the world, obviously. So we had a couple of better days volume-wise. And I can live with those days. You don't really want to see all these days down here near 1.5, 1.4. We had a 1.3 billion share day on the Nasdaq. So volume is very critical to what we consider for trading the markets, and I think it's always important to keep an eye on this. And finally, as usual, let's take a look at the economic data that's coming out this week and figure out what we're supposed to focus on. Usually there's one big thing. We just completed options expiration, so Monday could be a little bit slow. We've got existing home sales 30 minutes in. That's not a big deal. First day of a new options cycle, typically a little slow. Got a little relief over the weekend catching the bombers in Boston. Maybe the market will have a little bit of a bounce from that. We'll see. Tuesday, new home sales, not a big deal. Wednesday, durable orders and crude oil inventories, again, not much there. Thursday, the weekly initial jobless claims data. Again, that's weekly, that's not a big deal. It's Friday where the big number comes out. It's the first look of gross domestic product for GDP for the U.S. from Q1. Okay, you can see the average is about 2.8% expected for the quarterly growth number. So that'll be the big number of the week, and the market will be focusing on that. We are still in the core 8 days of earnings, so while Monday's light from an earnings perspective, Tuesday, Wednesday, and Thursday, a lot of earnings due out still, and then we're through earnings at that point, or through the bulk of earnings, and the market can sort of resume normal activity. So that's what we have for the week ahead. Obviously, we'll be calling it as we see it throughout the day in the TradeSight Lab. But the thing I'd be focused on, the biggest thing of the week, is that gross domestic product number on Friday.